Carvana and Opendoor operate a similar business model. They both buy and sell things and try and make a profit in the process. Opendoor does this with homes, trying to buy homes and then sell them for a higher price. And Carvana does this with cars, trying to buy cars and resell them at a higher price. So I thought it'd be interesting to compare these two stocks head to head and answer which one I think is the better stock to buy for long-term investors. So the first thing I wanted to compare these companies on is revenue growth going back to 2017, where they started at a similar size of revenue at around 800 to 900 million. Since then, Carvana has soared in terms of revenue growth to 16.3 billion, and Opendoor as well has grown its revenue to 5.2 billion. But Opendoor's revenue is down from its highs, roughly one third from its high of 15.6 billion in revenue in 2022. It now generated 5.2 billion in revenue over the trailing 12-month period, and management forecasted that revenue is likely to decline further over the next 6 months or so because it's prudently managing its inventory, right? It feels like the housing market is in a difficult, challenging situation. So it reduced the purchases of homes. And if it's reducing the purchases of homes, it's likely going to reduce the number of sales and revenue in the next few quarters because it has fewer inventories to resell into the market. Management feels this is a prudent step to take given the slowing macroeconomic environment. GDP, job growth, the U.S. economy is growing more slowly, and the increase in risks to the U.S. economy are making management more cautious. But at the same time, if the economy is slowing, it makes it more likely that the central bank in the United States will lower interest rates. And if that happens, that's likely to unlock more inventory and more activity in the housing market, which should be a positive for Opendoor in the subsequent quarters following the next few months. So a bit of a mixed macroeconomic situation for Opendoor. For Carvana, the big factor is the increase in tariffs, which makes it more difficult to manufacture cars outside of and inside of the United States. That's likely to boost demand for used cars that Carvana likes to sell, but it's also likely to make it more difficult for Carvana to purchase cars. Click the link below to watch the full video.